Live across North Texas and beyond, this is the Jenna Ryan Show.
Ain't that America? You and me. Ain't that America? Little pink houses for you.
Jenna Ryan is a world-renowned speaker and thought leader, ranked in the 87th most influential person online by Fast Company magazine. Jenna Ryan has spoken to thousands around the world and is now speaking to you. So with all things real estate and beyond, here is Jenna Ryan.
Hello, everyone. Welcome to the show. Happy Sunday. Hope everyone's having a great Sunday out there. I know it's hot. Good grief. It's hot out there. And we're having this really weird weather. It's like raining, like right at about the time I love to go for my run. It's raining every night, and it's hot, and it's muggy. And what's going on here in Dallas? I hope you guys are staying cool at the pool or just coming home from church right now. Welcome to the show. We've got an incredible show for you. Again, I never fail to deliver great information. That's what I'm bringing to you today. I have with me today Brad Cahoone. Brad Cahoone is the owner of GlobalHome Finance. Welcome, Brad.
Thank you for having me on, Jen, on this beautiful Sunday.
You're very welcome. I met Brad through a friend of mine, Stephanie Rayner, and she purchased a home, and she was just raving about all the things that you guys have to offer over there at GlobalHome Finance.
We work really hard to bring a unique product set to Texas and make sure we're serving at a higher level than our competition.
Well, there were certain things that really got my attention. Your marketing certainly is on target. And, anyone that has marketing on target, they've got to have other things as well, because that's usually the last thing people think of, right?
Absolutely. We've spent a lot of money on getting our marketing right. We make sure we hire the right people. We really pay attention to the entire process.
That is fabulous. Yes, we've been having a conversation before we got on air, and it's just very interesting what he has to tell us about. And so I want to let you guys know that the phone lines are open at 214-787-1190. We're also live on my Facebook at Jenna.Ryan1. That's my personal Facebook. You're welcome to come on and come and watch us live here if you wish, and give us a like, and you can actually write your questions in on the video, and you can watch it later or whatever you want to do. So anyway, let's just get down. I like to bring information to my listeners. I don't want to waste anybody's time. I want to understand what's going on. So what we're going to talk about, first of all, let's establish, how long have you been doing loans?
I've been doing loans for 15 years. I told you earlier I started at Citi back during the refinance boom. I was a processor before a loan officer, then worked up my way to a team lead, then branch manager before I became a broker in March 2008.
Wow, that is really impressive. And so now you own this, is it a brokerage or is it a bank?
Well, first and foremost, we're a bank. We do some brokerage activity still to satisfy loan requests that don't fit bank. But most of our business, probably 75-80%, is banked.
Okay, whenever you say is banked, what does that mean?
Well, what it means is we originate the loan as GlobalHome Finance Incorporated ourselves.
Okay.
And we're making the decisions on there. We're doing everything from A to B to C to D.
Okay.
And so we control the process and the quality of the process, whereas a broker, they hand off the application to a lender like ourselves and then move on.
Okay. And so you were talking about you have finances where you're actually doing the lending of the actual money for the home,
Yes.
and then you sell that loan off to someone else.
Yes, we do. That's how we're paid. We're not paid by the end consumer. We're actually paid by the end investor. They buy what's called the servicing rights from us, and we get paid service release premium for giving those because they're going to collect the payments then until you pay off the loan.
Okay, wonderful. And how many people do you have working for you there at your company?
Right now I have a dozen.
A dozen people, 12 people. So,
Yes.
So in 15 years, you've been able to grow a company with 12 people under you, and you're the loan officer. What is your licensing?
I'm a mortgage broker technically in the state of Texas.
Okay, wonderful. Okay, and so tell me what your niche is. What is your claim to fame? Why should people contact you?
We pay your closing cost. Why pay a fee when you can get it for free?
What?
We pay your closing costs. Seriously, we pay thousands upon thousands of dollars in closing costs for dozens of people a month. And DFW.
Wow, that is why I had you on, because I thought, what? No closing costs. So whenever we're talking about closing costs, let's just help people that maybe haven't bought a house in a while. What all is included for the buyer in the closing cost?
Well, you have things like title insurance is the biggest one. That's usually close to 1% of whatever your purchase price is. Your closing escrow fee. Well, you won't have an underwriting fee with us where you will at other places. We're waiving it. Then you have your attorney doc prep fees, recording, etc. We'll cover all that for you.
Okay, so let's say you're buying, let's just say a $300,000 house.
Yeah.
So what is roughly the amount of closing costs on a $300,000 house?
Well, it depends if you're buying points or anything, but just normally it's probably about $3,500 to $4,000.
$3,500 to $4,000. So they still have to pay what is required by the FHA.
If they're doing an FHA loan, yes, they would have their 1.75% upfront mortgage insurance premium. That's not a closing cost because it's actually paid by us to the FHA after closing. Okay, so it's outside of closing, and it's financed, okay, by you. So really, when you say like an FHA loan, you're putting 3.5% down.
Okay.
You're really getting a 98.25% loan to value in the end.
Okay. So you have to pay 1.75% for PMI, and then you have so basically total. What do you have to pay? I know it's really hard to kind of estimate numbers like this, but
no, it's 3.5%. Period, and then you
period.
Yeah, 3.5%.
So you can buy a home and just pay 3.5%, but generally you have to pay the 3.5%, and then you also have to pay closing costs.
Yes,
which includes escrow. Like you have to pay the taxes and the insurance
we
for
can
half
even
a
pay
year.
that for a lot of people.
And you're able to pay that for people.
Yes.
And you're also able to pay the title fee that normally is just one of those lines on that closing disclosure statement.
Yes, ma'am.
You're able to pay for the attorney, whatever, courier fees and all of those fees he is able to pay for people. And but you have to put down the 3.5, so you can't just no
that's
money
an FHA
down.
Requirement. We can't get around that one.
It's an FHA requirement to put 3.5% down. So if you're wanting a home, this will save you money. Now tell me what the catch is. What is the catch if you're going to give people all this stuff? Nothing's ever
Nothing's
free.
for free. You're right. It's barely higher interest rate, like 0.375 for a $300,000 house. You're probably talking about $60, $70 a month.
Okay, so what happens is that if you don't have all the cash that you need right now to purchase a house, if you don't have the 3.5% plus, the extra $5,000 for closing costs, you could still get in a house right now, but just have a little bit higher, a 3.75 higher interest, 0.375 interest rate, and you can get in a home, and that could be a really valuable option for certain people.
Yeah, I'll give you $5,000 to get into a house.
Basically. And so he's got this program set up, and that's really an awesome, very interesting program. And what are some of the other things about your company that make you great?
Well, we not only pay all the closing costs, but we shop across 44 correspondent and wholesale lending relationships to offer a more diverse product and qualification set than almost anyone in the state of Texas. Okay, it really gives us a 44-1 odds of beating the competition. If you had those kind of odds in Vegas, you'd be a millionaire pretty quick.
Okay, so what is if someone wants to purchase a home, what is the first thing that they should do?
Well, they should give us a call so that we can make sure that you're going to be qualified in order to get the price house you want for you and your family. You don't want to go in there and start putting your earnest money at risk, wasting inspection fees and appraisal fees on a house that you should have never qualified for. So one of the neat things we do is we'll even do a to-be-determined property approval. Before you even have a house, if you send me your income and asset documents, I'll pay for your credit report, and we'll make sure that you're fully approved for a house off income, assets, and credit to buy that house. So there's almost no risk to getting that house.
What is the difference between being pre-qualified and pre-approved?
That's a great question. Pre-qualified means that you've only pulled credit, and I've listened to verbal responses to an application from you in order to determine that you should qualify for a home.
Okay.
When I've pre-approved you, I've reviewed your income and asset documents in order to determine that we know that you're going to qualify for the price that we have approved you for.
What's the difference between that and credit approval? Credit approval, let me just interject here. Credit approval is that part that goes with the third-party financing addendum along with the contract, where you have blank number of days to actually get credit approval. It's not pre-qualified. It's not pre-approval. It's not what you get from your loan officer. And people are quite confused about this. It's a separate thing. And usually we put like 21 days or 15 days, just depending on the contract. What is the difference between the credit approval, What constitutes credit approval?
Okay, the credit approval is different because then we have to have also reviewed like your title and appraisal as well. Okay, credit approval is going to be a little more due diligence specific to the property you're attempting to purchase, whereas a to be determined approval is generic based on any property you were looking to acquire.
Okay, well, what does credit approval have anything to do with having it in underwriting clear to close?
No, that's not what it means. It means that we've done enough due diligence to issue an approval with minor conditions.
Okay, but it could still fall through after that credit approval because it could go into underwriting, and underwriting could catch something.
Yes, that's correct. Or maybe you can't prove a large deposit. You put a bunch of cash in the bank. There's all kinds of anti-money laundering laws and things that have changed over the last few years that can still kibosh a deal.
Yes, and so that's one thing. Whenever you're purchasing a home, be really careful. Don't go out and buy a boat. Don't go out and do things. Now, in your shop, do you guys check the credit once, twice? How does that work?
We generally only check it once.
What's the end?
Generally, they do, well, anyone and all companies have to follow Fannie Mae's loan quality initiatives. Okay. LQI is what we call it. That means that they're going to do a soft pull at the end to make sure you have obtained no new debts. If you obtain any new debts, then what happens is we have to review those with your income and the other debts you have to see if your debt to income ratio will still qualify. Okay,
so you have to do a soft pull at the end?
Everyone
has to do that?
Everyone should be doing it. If they aren't, they're in violation of Fannie Mae guidelines.
Very interesting, very interesting.
Yes.
Okay, so I know that you guys have to you're really highly regulated, especially after the crash of 2008, and home loans are really rocking and rolling again, and real estate we know is wonderful in Texas and Dallas. And so what are some of the requirements that a person must have?
Okay. Well, what happens is we have very specific things based on the product that you're looking at, debt to income ratio wise. If you go like with one product or another, it's going to vary. Like FHA, VA, conventional, all that's going to vary. But to tell you, like FHA debt to income ratios, 47 and 57 is going to be front end housing ratio is how much, in other words, for principal, interest, taxes, and homeowners
That
insurance.
Sounds really, really confusing. Do we have a break coming up?
Yes, we do.
So you guys, we're going to break that down. After this break here, we're going to break that down and make it so we can understand it, so everybody can understand it. And you guys call in. We're going to break. Are you thinking of buying or selling a home? If so, contact me, Jenna Ryan, with RE/MAX Dallas Suburbs. I was born and raised in Dallas, and I know every area and every suburb. If you're relocating to the area, downsizing, or upsizing, or buying your first home, I can help you find the home that's perfect for you. Contact me today at 972-510-9177 or go to my website at JennaRyanRealty.com. You can also email me at JennaRyanRealty@gmail.com. Whether you're buying or selling, I'm Jenna Ryan, your best friend in real estate. I have my own radio show, 25 years of sales experience, and a team of experts to help you with all of your real estate needs. Join me, Jenna Ryan, from 11 to 12 on Sundays, where we talk real estate on Talk Radio 1190.
Have you ever thought, if I could do it all over again, I'd work with computers? Those IT guys haven't made. What if I told you it's not too late? That you don't need a math or computer background to start an IT career? It's not rocket science. It's My Computer Career. See if an IT career is right for you. Go to mycomputercareer.edu and take the free career evaluation today. My Computer Career is where you can get trained for the high-demand field of information technology and start your new life as an IT pro in as little as 3 to 4 months. Attend classes on campus or live online, just twice a week to get what you'll need to start your new career. More than just a school, My Computer Career helps you get into the industry by working with hundreds of employers that hire our students. Financial aid is available to those who qualify, including the GI Bill. Classes start soon, so go take the career evaluation now at mycomputercareer.edu. That's mycomputercareer.edu.
At In-N-Out, your made-to-order burger is always prepared with fresh 100% pure beef patties and slow-rising sponge dough buns made right here in Texas. Visit InAndOut.com for locations near you and taste the In-N-Out quality difference for yourself.
Little pretty cows
Welcome back to the Jenna Ryan Show on Talk Radio 1190 AM.
Hello, everyone. Welcome back to the show. So glad to have you here on this beautiful Sunday. I'm Jenna Ryan, realtor with RE/MAX Dallas Suburbs. We're here live on air at Talk Radio 1190. I'm also live on Facebook at jenna.ryan1, and I'm here today with Brad Cahoone of GlobalHome Finance. And we are learning a lot, aren't we?
Oh, yes.
Well, you're teaching
Absolutely.
us a lot today.
I'm trying.
We're just discussing. I mean,
Yeah, absolutely. We're trying to make this add value to your time and make sure you're learning lots of great stuff.
Yes, and so we're going to answer your questions about buying a home today. But first, I must interject and let you know that I was selected or not selected, I actually ranked as a top producer.
Earned from a lot of hard work.
A lot of hard work. And the radio show definitely played a part in this, as well as my wonderful transaction coordinator and my team of people that helped me. For 2017, I was awarded a top producer by the D Magazine, which is a very prestigious award. I would say it's one of the most prestigious awards for realtors in the
DFW.
Metroplex.
Absolutely
Yes.
correct. That is a great honor. We were talking about that earlier, how you've achieved so much in such a short time with being able to climb to the top of that list. That is very impressive.
Yeah, because that's in 4 years. For someone to do that in 4 years is just really
Largely
unheard of.
Absolutely.
Right. You got to really know what you're doing. And so, but I've been around the real estate my whole life, so I really understand. They basically sent me a letter that said the top residential real estate producers in Dallas 2017 list was created purely based on sales volume and recognizes individuals, teams, and groups making an exception volume of sales. I got this award, y'all. It totally shocked me. I wasn't even paying attention to my volume. And I was just going to town, selling those houses, and it was fun. So let's do it again this year. You guys send me referrals, and I will take good care of you if you're looking to buy or sell real estate in Dallas-Fort Worth. As well as Brad Cahoone, he is also someone that would be good to go to if you want a loan. So what we're talking about before the break, by the way, the phone lines are open. Call 214-787-1190. Thank you, Don Boyd, for the congratulations. Also, if y'all could call in and ask questions on my Facebook, that would be wonderful. One of the things that we're wanting to answer here is what is required if they want to buy a $300,000 home. And my first thing is a job.
Absolutely, yes. We were talking about that. Job offer letter at least. Okay. If you're not on the job right now, you have to start within about 3 months. And that would mean that you would have to have a little bit of reserves. If you're going to start in 1 month reserve, 2 months, 2 months reserves, 3 months reserves. That's your principal, interest, tax, insurance payment, time the number of months you will be starting the job, until you'll be starting the job.
And that's W-2.
Yes, because we're going to have to use base salary only. We will not be able to use bonus, overtime, commission, or anything like that. And then if you're self-employed, you need 2 years.
Okay, so if you're self-employed, you need 2 years on the job.
Yes, that's correct.
In the same field, or can you be at two different companies?
If you're self-employed, it needs to be the same field.
Okay, are these Fannie Mae government rules, or are they your rules?
No, those are Fannie Mae, Freddie Mac rules.
Fannie Mae, Freddie Mac rules. So what is the minimum time someone can be on their job in order to qualify for a loan?
Again, they don't even have to be on the job yet. If they have a job offer letter, then we're good.
Okay, I know, but that doesn't always work like that.
No, it doesn't. If you need overtime, bonuses, commissions, then you do have to be there 2 years. Yeah.
Like if you have a break in the amount of time that you worked in the last 2 years and you've only been on your job for 5 months, then you could potentially have to be on it for 6 months, which is amazing to me that you can still get a loan.
Yeah, there's some ways to wiggle around those things. Like I can get it most of the time with the first pay stub is how most people do it. And we just use your base pay. But if you're not going to have enough income off just the base pay, like if you make a lot of commissions or overtime and other stuff that we can't show, then you're going to have to wait 2 years till you can use all sources of income. Okay,
so 2 years, good job history. And and also some reserves in the bank.
Yes.
Do you need reserves if you're going to start, if you just started your job?
Yes. If you just started your job, then that's going to be something that unless you have just a really big base salary, you're probably going to require reserves if you don't have high credit scores and a big base salary.
So how much reserves for like a $300,000?
That would probably be, let's say your payment's $2,500. I don't have an exact payment, but if it's that, then you may need $2,500 on there if you have decent credit. The worst it would be up to 6 months reserves if you have less than perfect credit.
Wonderful. And thank you, Mark Froman. I appreciate you online here. Okay, what is the minimum credit score you think you need?
I know we need a 580 if you don't want to have to put a lot down.
580, or you're going to have to put 10% down.
Yes, that's correct.
Okay, so 580, and that's not very good credit.
No, that's pretty bad credit.
That's bad credit.
Yeah.
So they can, if you've got bad credit, you can get a house.
You
now,
can absolutely buy
and
a
there's
house.
and there's certain things you have to do in order to get the house, but you can do it if you've got bad credit. So let's talk about, what else do we want to talk about? Do you guys have any questions? Stephanie wants to know, for those watching and listening, how can Global Finance help her?
Outside of Texas.
Oh, if they're outside of Texas?
Yeah, we currently don't lend outside of Texas, so we're not going to be assisting right now outside of Texas. I've purposely let my licenses lapse because we're so busy in Texas.
Yeah, we're doing really good here in Texas, and so you shop. You have something called Loan Tech where you go in
Yes.
and you shop 44 different banks
Yes, I do.
to find out which has the better rate.
And product sets and guidelines that will fit your needs.
Okay.
So we have a distinct competitive advantage versus anyone else because we leverage technology in order to scrape the best programs, products, guideline sets, and pricing for you and your family.
So not every lender can say that they have 44 options.
No, most have one rate sheet and one set of rules. That's how the bank works.
Okay, if you're to go to Bank of America,
Mm-hmm.
you're not going to be able to shop 44 different loan sources.
No, they have one.
And they're only going to have one. And so you really want to make sure that you go to a broker like Brad who can help you to really make sure you're getting the best rate and the best deal and the best program for you and your family.
And close fast. Bank of America has capacity issues.
Right. And Chase Bank, really it becomes difficult to close properly and on time because those people don't have a commission for doing the loan, I don't think.
Not much.
It doesn't seem.
It's like $350 a loan from what I've heard from people I've hired. And then sellers agents won't accept your offers if you have a pre-qualification letter from a large lender like that a lot of times.
Right.
Unless you're the only offer, you're way overpaying for the house, and they have a long time to sell.
Right, and that's not usually the case here in Dallas. Most
No,
of the
it is
homes
not.
are priced properly because we have a very savvy marketplace that understands that you price your house just a little bit under what you want, and you'll start that bidding war going, especially around the 300, 400,000 or below, or if it's an awesome house in an awesome neighborhood with an awesome school district and all the wonderful stuff.
Absolutely.
So, yes, definitely, I would, as a listing agent, I would definitely prefer going with a buyer that was with a local lender like GlobalHome Finance, because, it's better than if they're with Chase Bank. We're just like shaking our heads going, no, please no.
We underwrite here in Texas. They could be like Wells Fargo's in Michigan, Bank of America's out in North Carolina. They put their underwriting in other states, and the rules here are different. So the underwriter may not understand the laws in Texas, and it can create big issues for consumers here locally.
Okay, very interesting. And what kind of loans do you offer?
Well, we do the normal FHA, VA, USDA, conventional, all that, but then we also have non-qualified mortgages, and I'll go into that in more detail later, jumbo, and some bank statement loans, all kinds of different products out there that the bank will not offer.
Okay, so most people think that they're just going to go to their bank to get a loan. That's what everybody tells me when I meet them usually. They're like, oh, we already have a loan with, American, whatever their bank is, Bank of America, Chase. We already have a loan with them. We're just going to go to them. And they think because of that relationship is already built that it's the best deal. But
It's
generally
because
speaking,
there's a lack of financial education in this country, and that's what their parents did. So they just don't know better. So the bank is taking advantage of them. How do you think they have branches all over the place, their name on stadiums, their CEO has a yacht, a mansion, and a private jet? You're paying for that.
Whoa. That's very interesting. And so what are the bulk of the loans that you do? Is it FHA, VA, conventional?
Our main source is conventional. Then we absolutely do probably 50% total of our volume is VA, USDA, and FHA combined. So it's probably 50% conventional. And then, again, we are a USDA-approved lender, VA-approved lender since 2009, and FHA is sponsored originator here, making people the best deals in Texas for all of those programs, paying their costs and making sure they get in for the least amount possible.
Okay. Now, why would someone choose, like if they qualify, I've had clients that qualify for both FHA and conventional loans. Why would someone want to choose one over the other?
Well, FHA is going to be something that you have upfront mortgage insurance premium, and then mortgage insurance is life alone unless you put less than 10% down, then it's 11 years.
Is that the PMI?
Yes, that's the PMI
Okay.
for FHA.
The private mortgage insurance
VA doesn't have those, though.
Okay, so the private mortgage insurance is for the life of the loan.
For FHA, yes.
For FHA. But guess what?
No.
You only have to put 3.5% down.
Yes, and it can be a gift from a family member. It doesn't even have to come from your own funds.
That's right.
Yeah.
Now, what do you have to put down on a conventional?
Conventional, we have a 1% down conventional loan.
What?
Okay, there's only 3 places besides us in the whole country I know of for sure that are doing this.
Okay.
Okay, and that being said, we actually start you out with 3% in equity when we do that product. We gift you 2%. You're putting less down than we on your house to give you that.
So what does that
product.
mean in terms of dollars? We're almost going to break. What does that mean in terms of dollars on a $300,000 house? How much would I have to bring to the table?
$3,000 plus any costs we don't pay, and again, we can pay cost.
I don't understand that. We got to talk about that when we get back. Here we go to break. You guys call in at 214-787-1190. We're talking about buying homes and getting a loan. The most important part, your home is an investment. It's very important that we get educated about finances here.
Well, there's a black man with a black cat living in a black neighborhood.
Are you thinking of buying or selling a home? If so, contact me, Jenna Ryan, with RE/MAX Dallas Suburbs. I was born and raised in Dallas, and I know every area and every suburb. If you're relocating to the area, downsizing, or upsizing, or buying your first home, I can help you find the home that's perfect for you. Contact me today at 972-510-9177 or go to my website at JennaRyanRealty.com. You can also email me at JennaRyanRealty@gmail.com. Whether you're buying or selling, I'm Jenna Ryan, your best friend in real estate. I have my own radio show, 25 years of sales experience, and a team of experts to help you with all of your real estate needs. Join me, Jenna Ryan, from 11 to 12 on Sundays, where we talk real estate on Talk Radio 1190.
Texas. It's a big state with a whole lot of wind blowing around. What can we do with all that wind? Or what do you say we power all of our homes with pure 100% wind energy? At Breeze Energy, we're totally 100% green. We don't do coal or nuclear, and we never will. So why not go with the wind? Go to breezeenergy.com. We think you'll see we're a genuine breath of fresh air.
At In-N-Out, your made-to-order burger is always prepared with fresh 100% pure beef patties and slow-rising sponge dough buns made right here in Texas. Visit InAndOut.com for locations near you and taste the In-N-Out quality difference for yourself.
Welcome back to the Jenna Ryan Show.
Welcome back, everyone. Thank you so much for listening today. I'm here with Brad Cahoone with GlobalHome Finance, and we are talking about getting home loans. We're talking about getting finance, getting your house. Now is the time to buy. We're experiencing the lowest interest rate. What are we doing? It's incredible right now. It is definitely, it's a seller's market, but it's also a buyer's market. It's a very interesting time.
This is a good time to build wealth. Buying properties will definitely, in the long run in DFW, make you wealthy if you can afford to do it.
Well, absolutely. Well, just purchasing a home, not even needing to be wealthy, purchasing a home is a financial investment. It's one of the biggest investments most families will ever make is purchasing a home.
Absolutely.
And now is the time to do it. Tell me a little bit about what you see in interest rates right now.
Well, we know they're headed upwards. Ever since the election, they've been climbing for the most part. They steadied since January until this last week when we had some good manufacturing data and jobs numbers came in at a little bit higher than expected. So they edge rates up 1/8 to 1/4%. So now is the time to do things before they continue upward. We know the Fed has 2 more meetings this year, and there's anticipation that at least one of those will have a 1/4% increase there, which will also put pressure to increase the 30-year mortgage.
So you're saying, So now is the time to purchase a home because we don't know how long it's going to stay this low.
Absolutely.
And you
Plus
really want to get in
appreciation.
and grab it. Plus appreciation, plus the value of property is what you're talking about.
Yeah.
The value of property is going up every day. So if you don't get a house now, it's really going to be expensive in the future. So you really want to be careful.
The prices in DFW with homes going up in value is creating affordability issues for some.
Okay, well, right now money's cheap. You can get what's the interest rate today or yesterday?
We still see 3.75 on FHA and VA with
what?
Yeah, we still see that conventional slightly higher because you don't have the guarantee or the mortgage insurance you're paying like you do with those government programs.
That's simply incredible to get a loan for 3.75 with 580 credit and no job. You know, you just got no job, but you just a job offer letter.
Yeah.
And then that's just amazing to me. Now, years ago, do you remember you probably weren't in business yet 15 years ago. I think it was beyond 15 years ago, but the interest rates were like 18%.
That's in the 80s, yeah.
Back
I would
in
have
the
been a little
80s.
kid then.
You would have?
Yeah.
Me too. But I remember back then them talking about how it was the, 18% interest. Can you imagine?
Oh,
folks?
and it was an ARM. It wasn't a fixed rate either.
Oh, my heavens. Can you imagine it going any higher?
Oh, God, yeah. That would definitely push everyone almost out of affordability these days.
Absolutely. Well, it's very interesting. So tell me, you also have a program for people, like if they are teachers, doctors, first responders, and we're going to go more into depth with doctors. Tell me a little bit about what you can do for a doctor.
Okay. That's something that we have a market-leading product for doctors. We can go all the way to $800,000 with as little as 3% down. And the neat thing about that program, too, is we can exclude student loan debts. And it's not just MDs, okay, DOs, dentists, optometrists, ophthalmologists, all kinds of doctors. You should call us because we will help you get a better home financing solution for you.
If you're a doctor, you're sitting there, you're living in an old house, you just got out, you just graduated, you're living in a house that is not $800,000.
Yeah.
And you just got out of school, you have mounds of student loan debt, and you want to get a home. You do not have to wait until you pay that loan debt down. You can take your step up now, and we can help you get into the property now because they don't count in the loan to debt ratio your student loans right now.
Yes.
Well, that's a smart risk, huh?
You can't even do that on FHA for people with lower loan amounts than that. So that's a huge deal for doctors and really a difference maker for them.
Can we really go into what is this debt ratio? It just sounds bad to me. Debt and ratio in one little phrase. Ew. What does that mean?
It's really quite easy. What you do is you divide the amount of debt you have by the amount of income you have.
Okay.
And so certain programs have certain rules. FHA allows a 47% front-end ratio, which is your housing, and a 57% back maximum. VA doesn't have a maximum debt-to-income ratio. They look at residual income. And conventional, it's generally 45, although sometimes you can go to 50. Okay. And jumbo has a little bit different. Usually it's 43 for the cheap money, as I call it, or the lowest rates. And then we have some products from a couple of investors that will go all the way to 55% debt ratio for a jumbo loan.
Well, nobody knows what their debt ratio is. You just divide. Is that simple?
Help.
You just divide it?
Yeah, you just take.
But what do you know?
Your
How do you know what
debts
debt
are.
is? I mean,
well, that's a great question. There are certain debts that we as mortgage lenders look at that will be included. Those will be things like anything on your credit report, and then the taxes and homeowners insurance on any residential properties you own, plus commercial, any real estate you own rather.
Okay. What about medical bills?
Medical bills are not included on your debt ratio.
They're not included on your debt ratio.
No, that's not accurate. No.
That is very interesting. And what about health insurance and all that stuff?
Health insurance is not counted. That's why we only allow, like I said, a 50% debt ratio on certain products or 45 or whatever. Okay, those things are in the other 55 or so percent that are not being counted.
Okay, what about people who have collections or charge-offs on their credit?
If you have a collection, we don't have to count medical against you, but other types of collections over $2,000, then we have to use 5% of what the balance is as a payment against your debt ratio to show you still qualify. In case something happens, there's a judgment or something else pop up that could threaten the lien position for the mortgage, it'll make it where they want to show that you still have the capacity to pay that if that happened.
Okay, now if someone wants to get a house, what do they need to do? How can they get in touch with you?
They can call us at 972-724-3222, or they can apply online. We are always available. I'm available on weekends and nights. We're open 7 a.m. to 7 p.m. Monday through Friday, and Saturday we are in the office from 9 a.m. to 5 p.m. to serve you guys when you need us.
Okay, and so what is your website?
It's GlobalHomeFinance.com.
Okay, so if I'm going to get a home, I need a job, I need documentation. What kind of documentation do I need?
That's a great question. We need to get things like your most 2 recent pay stubs, 30 days of pay stubs, and then your last 2 years' tax returns and W-2s, as well as any IDs and bank statements, as well as any other asset accounts you would have. There may be other things depending on your situation as well.
Okay, wonderful. We have a question from Stephanie. Stephanie wants to know, do you help investors as well as home buyers?
Oh, yes. We help investors all day at a high level. We have old school stated income products for investment properties.
Interesting.
Yes. It's really based off the cash flow of the property, so it's not completely stated. But what we look at is 75% of what your rental income will be off the property. And as long as it will be a profitable property, we can get you money.
Really?
Yes, absolutely.
That means you can get me money.
Absolutely. Yes, ma'am.
Okay. And so let's talk about that.
Okay.
Because we can talk. So let's say I find a $200,000 house.
Uh-huh.
And I'm going to rent it for $1,500.
Yes.
So how much would I have to put down on that house?
So
with the stated income?
Probably about 25 to 30%.
Oh, well, that's a lot down.
It is a good amount down. But you're not having to pay cash. Okay, we can also do delayed financing if you bought the house cash and help you get your money back. And it's not hard money. Okay.
Explain what you're talking about.
Well, hard money is when you're paying like 12 to 15% and 3 to 6 points. Okay. When we're talking about these cash flow investment property loans, I'm talking about rates like 6 to 7%.
Okay. So that's really interesting as well. Yes, Stephanie, he can help investors with their loan as well as home buyers. Okay, so I want to know a little bit more about the hard money loans. Tell me how those work.
Hard money is a situation where you are not bankable at all anywhere. Okay?
What?
That means that no bank is going to lend you the money for your project. Okay, maybe you're buying a house that is destroyed inside. It's a $50,000 house, and once you fix it up, it'll be worth $125,000. But the bank is not going to lend on it. It's just a bad risk for them. You can't prove your income. Your credit score is 520, and the house is, like I said, in bad shape. So what will happen is that's not a loan that the bank is comfortable lending on. So we will go to get private money from individuals that we have pulled funds from in order to still get you the money. Okay, it will be more collateral based, where they look at what your plans are for the home and what the after repair value is as to what they will lend, and then they will give you the money. But then the rate is, like I said, probably 12 to 15%, and they're going to charge 3 to 6 points. It is a way to get the deal done, and you basically look at, hey, does your money make me money? If it doesn't, then don't take it. If it does, then you can get rich off of using that. That's what those flippers in California do a lot of the time that you see on HGTV or whatever. They take money from individuals, and that is hard money.
Is that also a bridge loan?
It is like a bridge loan, yes. You can absolutely use those as bridge loans.
And what is a bridge loan?
A bridge loan will get you through until you can get normal financing. So right now you don't qualify for a bank loan because of whatever reason, income, credit, the property.
You need to sell your house.
Yes, exactly. You have different problems that are not addressable to get a bank loan now, but it will bridge you until you can get there in order to refinance into normal, conventional conforming FHA, VA products.
Okay. And so how much is it to get a bridge loan?
To get a bridge loan with us, it's the same as hard money, and it would be the 12 to 15%. It's short term. Really, if you keep it 6 months, you look at it like, okay, well, 12 to 15% a year, it's really only 6 to 7.5 that you would pay of whatever that price was, and then the points that would go with it.
Wonderful. Well, that's good to know. Now, what's a jumbo loan?
A jumbo loan is any loan over $424,100. That is this set for this year.
Over 400 and what?
$424,100.
Okay, that's a jumbo.
Yes, ma'am.
Okay, that's interesting. You guys, did y'all see that I won D Magazine Top Producer Did you see that? I'm so happy about this.
We're excited for you, Jenna. That is a very commendable accolade you've achieved for yourself there.
Yes, I do list properties. I also help buyers find properties, and I'm listing a wonderful property in this week on Monday. I'm listing a beautiful home in Frisco in Heritage Green, and it's a beautiful Frisco ISD. It's going to be $579. It's gorgeous, has wonderful millwork, beautiful wood floors. It's in a great location, really close to Stonebriar. And I'm really excited about that listing. If you guys want to list your property, you can also reach me at 972-510-9177. And I can help you and come out and list your home.
She almost sold me on that house in Frisco just then.
Do you want it? We can
have to take a look at it, Jenna.
Absolutely.
That sounds good. If someone doesn't beat me to it, we'll have to take a look at that. Sounds awesome.
That's right. Absolutely. I'm looking for. Now, we haven't actually worked a deal together yet, but we will end up working a deal together, and I'm looking forward to doing that.
Likewise, I can't wait.
Working with you and Stephanie over there. Okay, so tell us, what are some of the other questions that people ask you about buying homes?
Well, we get all kinds of them, like, do I have to get financing answered before I get the realtor? Generally, you want to look at getting pre-qualified before a realtor starts driving you out there, because you don't want to waste their time or yours. You want to make sure that you get pre-qualified at the minimum and really pre-approved before you start to go out there taking time to look at houses, and that you're not going to risk any money by putting earnest money down and paying for appraisal inspections when you could have never qualified. So absolutely call us to get pre-qualified, and then we'll get you hooked up with Jenna in order to start seeing the right house for you and your family.
What about first-time home buyers? What are some of the incentives you have for those?
All right, first-time home buyers, it's something that we have TDHCA down payment assistance. We have the closing cost subsidy program. We have all kinds of incentives for first-time home buyers, like the 1% down conventional, or the TDHCA. We can actually help you get into the home where you may have to pay closing costs on that one, but we'll get you 3 to 5% in down payment assistance to really get you in there with nothing.
We got a break coming up. Here we go. We'll see y'all after the break.
Are you thinking of buying or selling a home? If so, contact me, Jenna Ryan, with RE/MAX Dallas Suburbs. I was born and raised in Dallas, and I know every area and every suburb. If you're relocating to the area, downsizing, or upsizing, or buying your first home, I can help you find the home that's perfect for you. Contact me today at 972-510-9177 or go to my website at JennaRyanRealty.com. You can also email me at JennaRyanRealty@gmail.com. Whether you're buying or selling, I'm Jenna Ryan, your best friend in real estate. I have my own radio show, 25 years of sales experience, and a team of experts to help you with all of your real estate needs. Join me, Jenna Ryan, from 11 to 12 on Sundays, where we talk real estate on Talk Radio 1190.
When smart businesses need to grow their team, they do it on the site proven to deliver, Indeed.com. According to an independent study, Indeed delivers 5 times more hires than any other job site, more hires than the rest combined. And right now we're giving new users a $50 credit to post a sponsored job, boosting your listing and relevant search results. Claim your $50 credit at Indeed.com/credit. Indeed, the world's #1 job site. Terms, conditions, and quality standards apply.
At In-N-Out, your made-to-order burger is always prepared with fresh 100% pure beef patties and slow-rising sponge dough buns made right here in Texas. Visit InAndOut.com for locations near you and taste the In-N-Out quality difference for yourself.